on that. And I think that's my next case for downside in Bitcoin or crypto in general, is the idea that we'll get some regulation out there that actually will help the case for longer term sustainability in crypto. But the next leg down to me is where you start to see the asset markets like the stock market really start to tumble when we do enter recession. And then the biggest question is, right, and I think we talked about this in the past, is when we get to the Yeah, so I mean, we've definitely had an impressive move on Bitcoin, right? So I mean, Bitcoin has finally woken up. I think that you see a lot of this hype building very, very quickly, which for me is a little bit of a concern, right? I've been through many bear markets in my 25 plus years of trading, and it's very rare that a bear market ends with euphoria coming in so quickly. Usually the first 10, 20, 30% after a bear market, investors are very, very skeptical. And that's not what I'm seeing this time. And that makes me a little nervous, to be honest. It does. I think that people were just kind of biding their time, and they're just jumping back on the bandwagon. I'm seeing incredible pumping across all social media platforms. Yeah, I mean, that's kind of where I'm at too, is that, there hasn't been any change. You could argue that the Fed is coming to the end of their hiking cycle, but that doesn't mean interest rates are going to go back down, right? I mean, we figure the Fed funds policy, level is going to remain at 5-ish% for most of 2023. So you don't have that dropping of rates that can stimulate kind of the Bitcoin surge again, like past bear markets ending, nor do you have quantitative easing going on, both of which are unlikely to come in this year. So for me, this is very classic of a bear market rally. And that's why I'm a little skeptical. I had some longs going into this. I was talking about a potential breakout. We've gotten that, but I always said it would be a breakout that would get bulls to kind of jump back on the ship, but it probably is a shorter lived bull market run, intra bear market, right? So let me show my charts here, because I think there's some cool things to look at. So number one, if we see this chart here, right, this is the bull run that we've just experienced. Incredible, right? I mean, we haven't experienced this in quite some time, but number one, I mean, it looks big, but if we zoom out on the chart, I think it's important to keep it in perspective, right? This is what we're talking about. This is what's getting all the hype, is this move up in Bitcoin. And again, like you said, very normal, because people had been kind of lulled to sleep with no volatility. I think we had the lowest volatility in Bitcoin history. So it was kind of dictating something would wake things up. But again, you have to look at, okay, this is the down market, and this is where we are right now. Is it anything yet to get excited about? And I'm going to tell you where I'm going to get a little bit excited. If we were to take out this high right here, which is the beginning of the FTX collapse, where we saw FTX, and all the fraud and all that come to light, that's where, if we could get above that psychologically, I think that would be a positive for Bitcoin. So that's so important, because people will see an intraday move above or even a close above, get very excited, and then they'll wonder why price gets slammed back down. So you want to see price get above and actually stay there and consolidate there, right? And again, if you look at where Bitcoin has stalled here, it's right at that level. Now, let's talk psychology of the markets, because this will be a great educational part, is that why do these levels have so much resistance? And the answer is this. Over here, you had choppy sideways to up move. You started to make moves to the upside right here, right here. A lot of people were buying Bitcoin. And then all of a sudden, that floor got just pulled out from under them. And they saw their accounts drop by 25, 35, 45%. In some altcoin cases, it was 50%. And so what happens is, when price goes back there, those people that saw their 10,000 account at 5,000, they're made whole again. And there's this psychological thing about saying, okay, I'm back to break even. Let me get out. Let me just walk away at this point. And that's why you have the technical resistance right at that level. So to me, this is the level I'm watching, right around 21,500. Let's see in the next few days what happens. I actually put out a short signal on Ethereum yesterday when we were above 1550. I think we're in a position to see a pullback here. I mean, it was just incredible the last couple of days, but especially yesterday, how you could see the shorts, just where price went up $100 on Bitcoin in a matter of seconds, because it was that short covering, just squeezing going on. And again, that's the key, is that, if you look at the stock market, and you've been around for a long time, Greg, is that, you see these bear market rallies that are they call them rip your face off rallies, because they're so intense and they get so much excitement from bulls. But again, if you look at the stock market, we've had moves like that. And in fact, I showed some charts earlier today. I posted one on Twitter, but basically what it was showing is that since Tesla has topped out, it had moves of 35%, 64%, 50%. And then even down here, you're at 18%, where it's, here we are with Bitcoin up, what, 25, 30% off of the lows. I mean, that kind of falls right in the midst of these moves that we've seen in Tesla. And I do liken Tesla and the type of people that are investing in Tesla as the same that kind of get involved in Bitcoin and kind of have that mentality. So I think it's important. You could look at any stock. I mean, you could look at Apple, Amazon. A lot of them have these bear market rallies where they jump 30, 40, even 50%, but then ultimately find themselves making new lows. And so I would just caution people out there. Yes, yes, it would be great to know that Bitcoin has made a low pivot and maybe we're starting to head up, but I wouldn't get too excited just yet. Yeah. In fact, what I think is so amazing about this is that you could see these moves that were occurring in stocks were precursors. And what it was telling you was that it was a risk on trade again, which then if you connected the dots, gave us a heads up that if it's risk on in Bed Bath Beyond, GameStop, AMC, all these things were running up ridiculous amounts. Wouldn't it make sense that the crypto market was going to get a squeeze as well? And again, I think that's such a cool thing to kind of connect the dots through different asset classes. We could flip over to AMC here. I mean, you could see the same sort of pop in AMC. I mean, not as dramatic as Bed Bath Beyond, GameStop, all these stocks. I mean, look at GameStop from this low of $15. It got as high as 20 and one or change. That's a 33%, 40% move right there. So yeah, I mean, you're seeing it across the board. I think partially this is a result of what I call the January effect, right? Where in December, you have lots of pressure from people saying, all right, I made money in crypto early in the year. I booked profits on Doge or this or that. Now I have losses on the rest of my portfolio. Let me sell to kind of not pay taxes or limit my tax liability. And then that's all done coming into January. So you have those sellers kind of going away. And then you also have the fear about FTX and kind of the shorts that we're building there as well, saying, oh, this is going to crush. I mean, I can't tell you how many times I went on interviews in the last 3 weeks and just said, Solana, yeah, I mean, it's absolutely potentially could go to zero, but there's a trade here. And the trade is very simple. It's that, you have an $8 coin that could go to zero. So you're risking $8, put 2% of your portfolio in it, but it could also go up 300%. So it's like a risk reward assessment. And obviously we see here what it ended up doing, but yeah, it's super fun to trade this market on that. And I think that's my next case for downside in Bitcoin or crypto in general, is the idea that we'll get some regulation out there that actually will help the case for longer term sustainability in crypto. But the next leg down to me is where you start to see the asset markets like the stock market really start to tumble when we do enter recession. And then the biggest question is, right, and I think we talked about this in the past, is when we get to that point, all investing people, all commentators, all investors, they're going to look to the Fed to bail us out, because that's what we've been accustomed to doing for the last 12 years, 13 years. And the Fed's going to say, honestly, can't do that. We can't start printing again. So now you're in a sustained economic recession where asset prices, because the companies will earn less, are going to have to go lower. And that question is how much of that sell pressure in the stock market trickles in to the crypto markets. Yeah. So I've actually started accumulating shorts on the S&P. I wouldn't call myself all in on my positions yet, but I'm in the camp that, I mean, we could go a little bit higher, but I do think that we're in a position here where we're going to see a bigger drop in the S&P. And I think this is, again, the same kind of thing. You're getting this asset kind of re-risking, if you will, people taking risk again, but we're now into some key levels on the S&P where I think you're about to see a bigger rollover and probably still trading down. I think this year at minimum we hit this 3,400 level, and then I think we could go down to this 3,000 level by late this year in 2023. Yeah, absolutely. And I think people have to look at the big picture, right? This is where you started to see quantitative easing at the lows in 2009. And this is the run we had. And now essentially the Fed is pulling the punch bowl away. And is it realistic to think that all we're going to see is this 20% correction on the S&P 500? I find that hard to believe. I mean, again, the addiction to easy money, cheap money is now gone. I mean, look at the mortgage market, look at the housing market, everything that's going on there. It's collapsing across the board. And that's only going to get worse once people start to lose jobs. As of now, job market is safe. I think that's keeping things afloat. You throw in a weak jobs number, where we start to see people net losing jobs month after month, and things get very nasty very quickly. Yeah, no, it definitely is different than we're used to. But I think the most important thing to keep in mind is that, the average investing age has dropped significantly. You've had so many new young investors coming in the market, partially through crypto, partially through meme stocks and trading that. And again, this all happened during COVID and work from home and money piling up because people didn't have to go to work and all this stuff. And I think you have to keep in mind that the average investor has not experienced, a long bear market in stocks. And that does concern me because it makes people think that, oh, yeah, maybe we'll have a dip, but we'll roar back to all-time highs in 6 months. And ultimately, you've been through, 2008, 2009. We've been through the dot-com collapse. And it's not, there's at some point a reckoning period where we're going to really have a reset here. The only thing I would say also is historically, when the Fed actually does pivot, the markets have actually sold off a lot more. So I think people have to keep that in mind, is that just because the Fed pivots doesn't mean all of a sudden bull market on again. I think initially you're going to get that reaction, right? People have been programmed to say, oh my goodness, this is fantastic news. But if you look at past scenarios where the Fed has pivoted, we've actually seen a significant decline in stock markets. Yeah, so this one again, here was your dot-com bubble high, which was again right underneath 5,000, and then we bottomed out. And this is the part that, for me, when I look at the dot-com rally, it's very similar to what you see in the charts now. And it, being someone who's been through multiple cycles like this and not just zero cycles like so many investors, you have to be a little wary. I mean, to see a market drop from 5,000 down to 700-800 on an index like the NASDAQ, I mean, that's pretty scary. And I think it's so interesting because I think we've seen some of these, like the Zooms and some of these other stocks, they've started to kind of bottom out, or at least it looks like that. But now you've been seeing like Apple rolling over a little bit more, some of the large caps starting to kind of be and to me, that's the final cycle of a downward move, is where you finally catch up to the strongest. The strongest finally get decimated. The Fed does not want to see crypto rallying back strong. The Fed does not want to see the stock market up significantly. In fact, I think it was 2 meetings ago where the initial statement from the Fed came out and the markets ripped up. And then Jerome Powell went to his press conference and he just said you could see him almost like looking at the market on his phone and then being like, oh, I don't want to rally. And then he just hammered the markets, and then the markets collapsed below that. So just keep that in mind, is that to get inflation under control, you can't have asset prices ripping higher, because the wealth effect takes over and everyone feels wealthier. They'll go spend more money, creating more issues.